Hi everyone, we meet again with another video. This video is of great relevance at this point of time. So the topic here is market at all-time high. Is it time to really sell your investments, especially the stocks? So now all-time high means now you don't interpret it as now the market has fallen some 200 points from all-time high. So I'm generally speaking of a euphoria wherein everyone is now almost the index has reached at an all-time high, say 18,800 or 19,000 going forward. So people are confused now, especially the new investors who have come into the market, say in the past 2 to 3 years, especially while Corona times, wherein they must have invested at a market low and they would be sitting at a higher return point. So higher return in the sense, say 30%, 40%, or say 60%. So those investors, I would say, has not really seen what the stock market can return back to you. So they have, or they must not have seen multi-bagger returns, say 10 baggers, 50 baggers. So the stock has multiplied over 50 times over their period. So this all things can only be experienced or known by those investors who have been long associated in the stock market, say 10 to 15 years or even more than that. So as myself as an investor is associated with the market for say for more than 12 years for now. So I can confidently tell that time given to the market is much more important than timing the market. So you cannot time the market. So now you think that now the stock has reached its peak. So there is nothing like that. Stock is just a piece of business, as I say. So the stock goes high based on its earning potential. So what profit it generates year on year. So if the business is good, they generate good wealth or profits, then definitely it will keep on breaking its all-time high. So people are now confused with the 52-week high value. So 52-week high value, then I should sell the stock. So one single question will remove all your confusions. The question is, I agree that you are sitting at a 52-week high for that stock. And are you sure that if you sell that stock right now and book the profits and pay whatever short-term or long-term, whatever as per the applicable period, you pay the tax. After that, whatever you get as a return, are you sure that you have another investment available at that point wherein you can reinvest that capital, principal, and the profit which you got out of the previous stock in which you have sold the profit, and reinvest that money into a new investment wherein it will ensure continuous compounding of your wealth going forward? In other words, once you sell the stock, do you have another stock which will give you consistent returns like the previous stock going forward? So if you are able to simply answer to this question, then you are free to book the profit in that stock. So many times what I have seen is that somebody in a excitement or in a momentum, and to tell your friends that I have booked 50% or 60% profits in a stock, they just sell it. Then they have the principal and profit with them. They would have paid good amount of tax also in that, and they would not have got enough dividends which the company was to give it in the coming years, but simply they have got a 50-60% profit, and that amount they simply don't know where to reinvest. So they sit on that money. They say they may put it in their FD or they put it in their savings account. They get minimal returns, which will even not beat the current inflation rates. So it's like you are depreciating your money. So if I was the investor, if I had invested in a good company, I would have retained those investments in the same company. I would have enjoyed the dividends. I would have enjoyed the profit the company is generating, and that would be reflecting in your stock price as well going forward. So that appreciation, stock value appreciation, and the dividends I would have enjoyed without a confusion of where to reinvest. So currently, because of the immaturity of many of the investors, I'm seeing that they are simply booking the profits uh, at the euphoria of all-time high thing, and then they don't know, and they lose the profits whatever they have gained in the previous stock because of the, probably because of inflationary effects, or probably because they are reinvesting in a bad investment wherein they lose their original capital. As Einstein told, compounding is another wonder of the world. So similarly, if you really know the effect of compounding, so you will never book such a profit, or you will be mature enough to not book a profit and retain your earnings or your capital in that particular company where you have done a thorough research. Assume that you have done a thorough research, and if it is a good company, then going forward it has got a huge earning potential. Especially if you are talking about Indian markets, then India is at an inflection point. It is just growing. It's a developing country. Another 10 years, it will reach greater heights, great earning potential for various companies. They are still at their nascent stage of just revealing their original earning power. So you should not be fearful while others are selling. Just stay in the investment and enjoy the effect of compounding. So whatever profits the company is getting, then if it is a good management, they reduce their dividends, they reinvest that money back into the business, procuring more businesses, say inorganic or organic growth, or going with new equipments, new plans, new strategies, new products and goods. So like that, they expand the business. So you should give time for the company to stabilize, expand the business, then further compound their wealth, profits, etc. If you ask me, what is the basic thing or ground rules to be invested in a stock market, is that first thing, like I told in my previous video, capital protection. So main thing, you should not erode your original capital. Second thing, you should not allow your money to stay idle and get the inflationary effect on you. So the money you are holding today, next year the money value will drop because of inflation. So you should not allow the money to be idle. It should be invested for sure. Third and most important thing is that you should put that money in such an investment wherein it compounds and multiplies your wealth over a period of time. So if you stick to these three ground rules, then I'm sure that you will create great wealth from stock market. As I keep saying, when to sell the stock, you have to sell the stock, or in that case any investments, if you have reached your goal, or if you have an alternate investment wherein you feel, or you have researched and you have found out that you will get greater returns than the current investment, or else if you find that there is a change in management in case of a stock or fundamentals of the company, or in case of a mutual fund, if the fund manager has changed and the investment philosophy has changed, or in case of a real estate wherein the price has peaked, or if there is some fundamental issues with the land, or some new rail is coming through the land, so the price may depreciate going forward, etc. So such red flags or such events, if it happens, then only you have to sell the particular investment. Otherwise, it is very clear that you have to stick to your investment and allow the money to compound itself for making great wealth for you. So as I told in my earlier session, or in my session video number 41, emotional investing and behavioral finance. So under that topic, I have told that you should avoid herd mentality. Herd may do anything they want. They may sell, then they may suffer the losses. So you are not such an investor. You are a mature, balanced investor wherein you know how to invest and what a business is, or how the business held by that stock is. So you need not worry about the herd. Herd are short-term investors or immature investors who doesn't know anything. So you are much above that. You hold businesses through stocks. So you need not worry about the herd mentality. They sell, they buy, forget about it. If you have your own analysis, and if you know clear targets of your goals or your alternative investments or your profit understanding of the company, then you need not worry about that. You stick to your own principles and follow that. So as I always say, you need not keep doing something in the market always, reacting to some events. You can simply sit idle, relax your cup of tea, and watch the market where it goes. You need not act like you have to buy something, sell something like others are doing. So you need not do that. You can sit idle also and allow your wealth to compound. So doing nothing is also an intelligent way of getting out of such volatile markets. So hope this session was really useful for you. If you like our content, please do like and even subscribe to our channel to get similar content going forward. If you have any suggestions on our video, whether it is our video quality or the way of presentation or the topics we are opting, or some new topics you would like to introduce, so that I can do my research and stream it next time. So always open for various suggestions. Also, I have tried to improve my videos going forward based on the earlier suggestions from various subscribers and friends. So thank you all for all those suggestions and comments. See you in next video. Till then, happy investing.